Hey guys, welcome back to the channel. Today's video, we're going to be looking at the Social Security Trust Fund and the depletion that is coming, guys. So the Treasury released a report just a couple of days ago saying that Social Security is going to be fully depleted by 2034. We're going to have to take a look at this and see exactly what they're doing for it. So right now, guys, Social Security combined funds that pay retirements, disability, family benefits, have a pay schedule until 2034. At that point, the Treasury has said the fund, essentially the trust fund that is Social Security, will not have enough money to run. At that time, they're playing around with paying 80% of scheduled benefits because essentially with the money that is coming in, it is not covering what is going out. The new projected date is 1 year earlier than what it was forecasted in 2022. So now we're going into 2023. It seems like the money is going faster again than it is coming in. So what are some plans, or what are they doing about it, guys? So Social Security Trust Fund have the new depletion date, and they're talking about a big idea to essentially privatize Social Security and invest that in the market. Right now, Social Security is invested, it is a trust fund, but it is invested into treasuries. That is right, guys. Treasuries for an incredible amount of time were paying next to nothing. And now that inflation is so high, inflation is eating up the money that we do have in the Social Security Trust Fund faster than it ever has. So the idea calls for creating an investment fund separate from Social Security and allow the investors to earn returns over a period of 70 years. So again, if you think the average life expectancy is 80s to 90s, you start working when you're 16, 17, 18, whatever it may be. People are going to continue to put money into Social Security. And the problem is right now, the Treasury yields are yielding about 1%, 3%. When inflation was sky high, it was 7%. But still, when you look at the market, when again, we talk about ETFs, we talk about the S&P 500, averaging a return of 10%, where the Treasury yields are 1% or lower when inflation is low. Again, the growth factor that we're seeing with the Treasury and with specifically with Social Security has to be there, guys. They have to do something, because essentially, even if you put the money in a high yield savings account, whatever it may be, you're going to earn a much bigger return. And when you're looking at Social Security, they estimate there are, I believe it said 67 million Americans that are collecting some form of Social Security or government assistance that fall under this program. So by allowing the program to invest funds into the market, when historically has provided more than an 8% return, this would address 75% of the shortfall that we're seeing with Social Security, which is, again, kind of crazy. And I don't know if, again, this is going to be its own fund, if they're going to kind of build a portfolio around it and see exactly what it is. So it would target Social Security Trust Fund's biggest weakness, which it has now the absolute worst investment strategy that you could possibly have. Now, this raises, again, for me personally, a couple questions. Why has it stayed this long for this low for this long? I mean, Social Security is something that has been out for or around for an incredible amount of time. A lot of people rely on Social Security. So again, having the government come up with a plan that is going to make this work, I don't have the full trust in the buy-in of this, but it's going to be interesting to see. So they consider this, it is Silicon Valley Bank of pension funds with an investment strategy inadequate for high inflation, which, if we know Silicon Valley Bank, it is really the bank that failed on really poor management. And we don't want to see the same thing happen with Social Security. It can't happen on Social Security. I don't even know what would happen at that. What would happen at that point. So in addition, guys, they also talk about privatizing pensions. So again, pension funds are very similar, where, you know, a majority of the pension funds are just money either held aside that the younger generation pays into the pension takes the money, pays the other individuals or the older individuals that are retired that receive a pension, and the money kind of goes on through that. The problem, again, with the pensions, it says there's about a 25% shortfall right now in pensions, and that is why a majority of companies do not have pensions at this time. Even a lot of the general laborers, the contractors, things of that nature, the pension funds have slowly been going away. And even a lot of people that are going into the trades will not and do not have access to a pension fund. It's actually been swapped over to a 401k plan for the exact same reason. So the idea for investing Social Security funds in the market is inspired by private pensions. Again, some of the pensions are public, depending where you work, some are private, and the private pension funds that are invested in the market are doing incredibly well. It's risky not to be in the market is kind of what they focus on. Every fund that takes the part of the risk. Problem is, what do we do when we have a 2022 when the market is down 22%? I mean, when you're talking about billions and billions of dollars in this pension fund, what's it going to look like for money going in, money going out? But overall, when you look at a 70-year plan, and again, you look at, pretty much the S&P 500, the stock market, whatever it may be, guys, over the course of 70 years, the returns are there to kind of provide and build itself. The Social Security Combined Trust Fund will be able to pay the benefits again till 2034. According to the recent releases from the Treasury, the projected reserve depletion date has been quite stable over the past 12 years, but it keeps going down. The date keeps going down. The projection was 2035. Then it went to 2034, and it seems like the depletion date continues to get closer. So it's going to have to change, guys. There is a point where it is going to have to change. Possible changes to Social Security include increasing taxes. So, of course, increasing the tax money the tax of Social Security to us as working individuals is, of course, going to provide more money in there. Benefit cuts, which again, they've talked about doing the 80% of the Social Security benefits, or a combination of both, increasing the taxes or cutting the benefits. But again, if it was invested in the market, if it was invested smartly, it seems like it would be a much easier, much better return. Even if it was a combination of all three, I think that is really it. So they've also talked about the size of payroll and taxes have not increased enough over time. The longer we wait to really get this in, the harder it's going to be, and the less time you're going to have to essentially grow this fund. So the proposal aims to solve 75% of Social Security's funding shortfalls. The other 25%, again, is going to be higher taxes, or it is going to be less benefits to the people who are receiving this Social Security benefit, which again, we're going to have to see exactly where this ends up, guys. So if you're on Social Security, I know again, they said 67 million Americans are on Social Security. There's definitely going to be some big changes coming when you look at the road to retirement and seeing exactly where the benefits are going to be. Now, last year, I believe it was an 8.2% increase in Social Security benefits, which of course kind of tracks with where inflation is, which means you got a pretty good increase. However, the cost of goods have went up far over the 8%. I think when they even looked at fuel, energy, food costs, you were talking 30, 40, possibly even 50%, depending where you live. And then you couple that with the increased cost of rent or buying a house. Housing expense has been, kind of crazy as well, which this could be, again, privatizing Social Security, putting it into the market as an investment strategy is going to be interesting, and I definitely want to follow this. So guys, that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.